when we leave this consolidation inside this order block, it drops down into it here. Mean threshold is half of the order block. So half of this range. This is what you want to do with your fair value gaps and what you think is an order block. In my mind, I'm watching on a bullish order block, I'm watching the high to the midpoint. I want to see it show a willingness to support price, preferably hit it and quit it and run the other direction real quick. That's what I'm really looking for. But if it starts doing this, and as long as it's respecting that midpoint down here, I'm okay with it. I'm more specifically going to be watching if it starts to consolidate. I'm going to go in with like 6 contracts. I'm doing my typical go in, I buy 6 contracts, and I'm going to try to parlay it up and build a bigger position. What would I do? In this instance, using the order block, I'm going in right there at that price. I'd be going long on the first return to it there. So I would go long 6 contracts there. As it's digging down, I'm going to watch. Does it want to go to the mean threshold? Mean threshold is half of an order block, or half of a breaker, or half of a mitigation block. Then I would buy 3 right here on this candle as it hits the mean threshold. So now would be long 9 contracts. If it runs like it does here, and then one more time pumps into it one more time, then I'll do my one last contract, and I'd be long net 10 contracts. 6, 3, 1. Hoping that I can get the little wick through the midpoint, trusting that it isn't going to go the other side. How can you trust it, ICT? Experience, knowing that it's likely to do what I'm explaining here, and also being comfortable with being wrong, because I can be wrong and be profitable. I can be right and be not as profitable as I should have been. There's a gray area where experience dictates the outcome. When we see this range here, the midpoint of the order block, once it leaves it, okay, once it leaves that, what's this candle right here? This is a propulsion block. It's an order block within this order block. So it's a nested level. I love this formation. I love it. Let me show you why I love it. What's the opening price? What's the opening price on the candle right there? 4029.25. That price to its high right in here, that is one of the most sensitive bullish order blocks, responsive, quick, sudden, like you want to see a dynamic movement, it's going to really do it on this. Show me the order blocks that work. Well, here's that lesson. This opening price to its high, that is the absolute most sensitive area in order block theory, 4,029 and a quarter. It goes through it. It leaves it on this candle. Does it not? The next candle we open here, what's the low of that candle? 4029.25. Wait a minute. Deja vu. Something different here. No, it's exactly the same. The run in price here, you have several things you can look at. You have the buy side relative equal highs here. So we have buy side here. And also, what is the highest closing price? I'm going to walk through the PD array matrix with you, okay? And what else do you have? What's the highest high? Right there. So this high, what have I taught you about that? Wicks are gaps. What? Wicks are gaps. Midpoint of that gap is consequent encouragement. It's 4,036 even. What is the closing price on that candle? 4,036 even. Yes, there's a small little wick. I'm caring more specifically about the bodies, because the bodies are going to tell you the narrative. The wicks are where the damage is done. Does it offer from this point here, buying into the propulsion block, from here to the first rejection block right here? That's the first of your premium arrays. Does it offer 5 handles there? What does it leave? It's a fair value gap, isn't it? How do you know it's going to stay open? The propulsion block. This shouldn't stay open. It should stay open. It should not fill in. This would act as what? A breakaway gap. So if this is breaking away, I'm going to expect what? Price delivery to be more bullish candles, very little retracement, and maybe 1 or 2 down close candles. Everything else be what? Bullish delivery. Buy side being offered. How many down close candles do you have from the propulsion block to the consequent encouragement of the wick? You have 1 down close candle. Why is that important? You need to know the difference between signatures that are going to be favorable for you. If you start seeing a lot of consolidation and down close candles forming and booking in a price run that you're in, chances are you're probably going to get a retracement and come back on your stop loss, or it's not going to go in your favor anyway. So I'm looking at how does price continuously deliver? Is it giving me bullish candles? Is it staying bullish each time? With the exception of this candle here, every candle was bullish. And I'm not worrying about all the little whipsaws back and forth, because I'm not going to ram my stop loss up there, theoretically, because I want to see it do what? I wouldn't even roll my stop up until this short-term high was taken out, because above that is what? A very small pool of buy-side liquidity. Buy stops. Anyone that's short, they would have trailed it from here to here. And then we move back into consolidation. And we're entering what time of day? Noon. That's lunch. Most of the time, you're going to be squaring your position before noon.